Good morning, everyone. This is Jason. I hope this video finds you doing well. It is Tuesday, April the 12th, 2019. I want to do a little bit of a market update video. I know it's the beginning of the week, just kind of give a weekly outlook, and we can kind of add in what happened in yesterday's close. And I also want to wave a caution flag out there for traders too, because I'm noticing something in the news cycle and everything like that. Quick housekeeping information. There's probably not going to be a live video this week. I'm going to be in 5 different cities in 2 different countries over the next 7 days. So I'm not going to be available to shoot the video on Wednesday or Thursday, and then it doesn't really make sense to do them on the weekend because people are too busy to go on the videos for that. So we'll pick it back up next week. People that are new to the channel, please subscribe. And what we do on the live videos is, you join me on the live stream, tell me which chart you want me to analyze, and I'll pick it up and break it down from a technical analysis perspective. And maybe it's helpful, maybe it's not, but that's what we do on the channel. So we try to do it every week, but when my travel schedule gets a little crazy, we do miss a week here or there. So we'll pick back up next week, and then I'll be in one spot for a little while, so we should be pretty consistent. All right, let's get to the broad markets. Yesterday we had a tremendous rally in the market, quote unquote, and it was an up day. And let's take a look at SPY here. And the reason I use SPY most of the time is because it's the broadest index. QQQ, the S&P, the NASDAQ is 100 stocks, and it's geared really heavy towards tech. So it's almost like a tech index to some extent. And then, the Russell is 2,000 small cap stocks, which are kind of a precursor to the main market, but there's a lot more risk, and so it's a little more volatile. And then there's I don't really follow the Dow. It's only 30 stocks, but it's pretty well weighted in that one too, but it's just a small number of stocks. So the S&P, I think, gives you the best view of the broad market. So that's a good thing to use. And I use the broad market direction in my analysis on what I do on my individual stocks. I've never really got into that on the channel, but I do use that as a component to help me with my biases or which direction I should take, because a lot of the times the market throws all rhyme and reason out. When the market's going down, everything goes down, or when it's going up, everything goes up, and it throws the individual fundamentals per stock out of the window. So you can use the direction of the S&P to somewhat help you form your bias on your individual stocks. All right, but we're not going to get too much into that today. But I will say, so what we said last week is that this move here that happened, let me see, maybe I should zoom in a little bit here. This move here, we had a trend break right here. And I use time to mark trend lines, which use the last 2 reference points to create the supply or demand lines. So we had a trend break here, and this is in monthly resistance area. Now there's support down here for the whole move up, and there's this, this is monthly resistance area, and we're seeing a crossing or a change of polarity in a monthly resistance zone. All right, so here's the thing that's concerning for me. I'm watching the news cycle, and I looked at a lot of, every day I'm watching everybody online that does stocks. I'm in this game, so there's you go to your recommended videos section, mine are full of stocks and real estate based stuff, and every once in a while some Dragon Ball Z. I'm 39, and when I was a kid I watched Dragon Ball Z, so every time that pops up I'll watch a video, so it just keeps throwing into my feed. But I digress. So I look at the stocks, and I'm looking at the analysis, and I'm pretty big on MSNBC and Fox, just to know what the general market view is, just the general market view. And so what I found is that there's a lot of bullish talk. The bull run's going to continue. Now's a great time to buy, and I'm hearing the rhetoric, and it's very, very positive and bullish. And I would be very, very weary about that, because here's the case for the bullish activity. If I was to look at this chart and I wanted to identify the last, major swing low, you could say it was this one on this daily chart. And then you could draw a fib on this, and you could say, okay, so we had a nice move up. The market corrected a little bit. Here's a 61% retracement of that move. And now buyers are re-entering the market to continue up. And that's a viable I mean, that's a viable thought process, I guess. But here's where I'd be weary. The difference is the polarity has changed on this market. Top here, retest and fail, consecutive newer lows. This to me looks like a retracement, not a continuation of the bull run. Now, I could be wrong or I could be right. And this is the thing about people that are online and people that are prognosticators on TV and supposed experts. The thing is, nobody wants to be wrong. So everyone plays every side of the coin. Like, it could go up, it could go down. I do that at times too, because I don't know. Because in trading, no one knows. But here's what you're supposed to do as a trader. You're supposed to play probabilities. You're going to be wrong. There's no way around that. You're going to be wrong. So in real life, traders are wrong. It doesn't matter if you're selling a course or you're selling an alert service, or you want to promote, your book or whatever it is. People don't want to be wrong because it doesn't look good for them in selling whatever their product is. But the truth is, in real life, every trader loses trades. So your goal is to put the probability or the odds in your favor and trade on the side of probability. I'm going to tell you, in a resistance area, in a monthly resistance area with a change of polarity like this, and then the follow through from the bearish activity, the odds that this market is going to go up and make new highs from this spot is probably 25 to 30%. Okay. So the safest play is the sell position, the bearish position. That does not mean that's the correct position. If I'm going to be 100% transparent with you, I have a limit order. I had to delete it off this chart before I did the video because I don't want to lead you guys. But I have a limit order to sell on SPY, and it hasn't reached that price yet. But I have a limit order to sell this back down, and it hasn't reached my level, and I have rules to it, especially on open, because right now it looks like price could open very close to where my entry would be, or it's a little bit lower than that. And so I like to wait the first 15 minutes. And a lot of the times what you'll get is it a spike up, up, and up. And like if it went and made a new high, I would still sell it. The higher it goes, the better. In the first 15 minutes, I'd sell it because that makes my stop loss further back, which gives me more room because ultimately I think the thing's going to go down. Now, I could be completely wrong about that. And I'm not giving anyone any advice to sell SPY right here. I'm telling you what I'm going to do. But I've picked a side. The bias is on the side of the odds, and the odds are, I would say, 70-30, 65-35 at worst, that the market's going to go down. But I'm seeing the sentiment that this is the continuation of the bull run, which wasn't a bull run to begin with. The bull run was a correction in a bear market. All right, so we're gonna snap back out a chart and take a look at that. But just be careful following the bullish activity, because remember, 90% of the people in the market are losing money. So if you're doing what the herd is doing or what the consensus is, you're losing. And from what I saw yesterday, after yesterday's move, it was unbelievable that I couldn't believe how much bullish talk and rhetoric that I heard based on yesterday's move. And I'm just thinking to myself, do people follow the charts at all? Because this is a very bearish signal. All right, so this is SPY on the daily chart. Let's take a look at the weekly chart, which gives it even better perspective. This is why it's always good to zoom out. Okay, so we had a 20% drop, right? We've had a strong retracement. We've had a zone that was tested 3 times previously. Price failed there, gave us this gigantic bearish engulfing pattern. And we've had 2 weeks where we've closed lower than we opened, straight, in a resistance area. This is a bearish indicator. It does not mean that the market will not break this high, go up, and make new highs. It just means that the odds are much lower that that's going to happen than it is that it's going to fall from this spot. So all my bullish players out there that are reading into what you saw on MSNBC yesterday, or some of the online forecasters, just be careful. Be careful. This is a very bearish indication. And if you take a bullish trade, you're playing against the odds, and you could win. Like, we could have this video. I could do my weekend review video, and the comment section could be littered with people saying, Jason, you're an idiot. The market went straight up on Tuesday when you made that video. Well, that's why you use strong money management. My SPY trade will be the 5th position that I have open. I have 4 other open positions right now. and my risk on that trade, I think, is around 0.3 or 0.4%. So it's less than 0.5%. And if I win the trade, my target is always 2 to 1. So I'll make almost 1% on the trade. And if I lose it, I'll lose less than 0.5% on the trade. And that's how it works. But I could be wrong. That's allowed, you know. But the bias is down, and the probability of this week is to the downside. Okay, so just be careful. And that's my thoughts on SPY. I mean, we could get into individual charts, but like I said, this is the broad market and the best view of the broad market. And it's amazing that, but you know, charts are so consistent. Like as far as polarity changes, retracements. For retracements to work, there has to be people that believe that the market's going to continue to go up. So for the market to fall, there has to be someone on the other side of the trade willing to buy as the market's push down from selling activity. That's just how it works. But when you study the charts, you wonder, why doesn't everyone just pick up on these, you know, the way that the market moves with retracements and breaking new highs and breaking new lows. But it's just psyche and rhetoric and sentiment, and there's just a lot of factors that go into people making their decisions in the market. And it's just amazing to watch. Like I said, this is a 70% probability that the market's going to fall here. And this would be when I take a firm stance like this would be the video where I'm absolutely wrong. But that's okay if that's the case. But you pick a side, and sometimes you're right and sometimes you're wrong. Use good money management, have good risk reward ratios, and control your losses. You know, I'm not going to let my stop's not going to be way back here. You know, my stop's going to be at a reasonable level that if I lose the trade, I'm going to lose less than 0.5% on my trade, and I will try it again next time. Right? So that's all I have for you today. I have a flight in a couple hours, so I need to get moving. You guys have a wonderful rest of your week. I will make a weekend review video at the end of the week, Saturday or Sunday. I'll try and get it out. I'll be moving around both days, but I'll try and get that done. And like the video if you liked it, and I will talk to you very soon. Have a good day.